Ladies and gents, good morning, good afternoon, good evening. This is a new episode of PairTrade Finder PRO, where we are analyzing the pair ICUI and TFX, tickers for ICU Medical and Teleflex, two companies in the medical instrument sector. Signal was triggered by the software on the 9th, one day only after ICU Medical earnings announcement. Such announcement was the reason for the setup to appear. So the main objective of this video is to study how to deal with a pair that is on its edge at very first sight, but there are some other parameters that we still think has a good potential when we go to an in-depth analysis of all its characteristics. Let's see how to do it in order to minimize the risks associated with these pairs. So at the end of the day, what we are trying is to find equilibrium when choosing a pair which is close to its edge because of the reason how the signal was formed. So first thing is to analyze all our parameters in the cheat sheet we normally use to take a decision on whether to go ahead or not. And you will see that in fact, this pair presents some doubts on some of them, but in some others it's quite convincing. So there's a trade-off to evaluate here and a decision to be taken that could go either good or bad. But our job as traders is not to try to be right by all means. Our job is to manage the situation in a way that minimizes the risk in case we are wrong. That's where success resides, and that's way more important than trying to squeeze every penny out of every single trade. So let's see how we did it and start by checking news. If I go to ICU Medical, what I observe is that they announce earnings May the 8th and the signal took place on the 9th. So this is the reason for sure for the signal. You can observe it here that the price goes from 184 to 209 with standard deviation of 4.26. We don't like signals that form so abruptly, but in some instances you want to dig a bit more and you realize that the price that PairTrade Finder PRO used for the signal here corresponds to the session on the 9th, and it's the price of the close at that day. So the price at least have this full session to get stabilized. A good practice on this situation is to wait another full day and enter the trade close to end of the session on the 10th, so here. And as you see, this make the entry something not so extreme and with two sessions of price stabilization. This is what we are gonna take into consideration. We are gonna do our analysis as if we would have entered the trade May the 10th. Now, the more important thing to understand is that the signal, more than a structural improvement in ICU Medical, is because this is a fast-growing sector in the last quarters, and the same positive impact can be expected in Teleflex, which is our long leg, and which make both legs reconvergence very possible. Earnings in Teleflex happened previous week, so no issues with that. So let's get back to the news and observe that apart what we have already mentioned, there's nothing else to be highlighted in ICU Medical. And in Teleflex, there is a news that states how much they are going to pay in dividend on the 9th. So this is another clear affecting event, but in this occasion is in a positive way because Teleflex is our long position. So with that, we go to our cheat sheet and mark earning dates with the yellow for the coherence shake. Rest of the news are green, and dividends is also a green because ICIU Medical doesn't pay dividends. And again, we are marking earning dates with the yellow because, as already mentioned, the movement was very aggressive. But if we wait for a couple of days for stabilization, I think that we can still continue at least with the analysis. I'm gonna mark it with the yellow, of course, not with a red, as we understand in depth now the situation with ICIU Medical, but of course it's not a green either. So next box is per momentum. We go back again to our software. In ICIU Medical, going to May the 10th, we observe that it is in a peak, and reversion from this point is very possible. And in Teleflex, price has been dropping, so also a good place to get in as reversion possibilities are increasing. Here is where co-integration should do its job. We mark this with a green. Ratio chart has been pretty flat for the last 1.5 years, so that is also a green. RSI was almost 80 points, but more importantly, that presents a divergence with the ratio chart, so an imminent reversion is highly possible. This box is a green. Correlation for the pair is almost 62, and co-integration is 0.94, as you observe here. A very good set for these two important parameters, so a green in both boxes. Volatility was at 3.39, which is above our threshold, but below our no-go limit of 4%. So this is a yellow. We mark volatility with the yellow, co-integration and correlation with the green. CAGR above 15% and drawdown 4.56, which is a superior combination for this set. A big green here also. Now take also a look to the P&L shape of this pair with 100% winners in 3 years. This is indeed a very good looking pair. You can see also that average days in trade was around 9, which is also quite fast. And all in all, this is why we wanted to go in depth, because we feel that there was a good potential. Now let's look how the pair did evolve and how we manage it. Entry, we waited for the trading close on the 10th. So standard deviation 3.68, which is more palatable. And our rule dictates that if the trade reaches standard deviation minus 1.7, we exit the trade. In our example, that level is 1.98, which happened on the 17th, as you see here. So at this point, we should exit the trade. At least, or as a minimum, take partials here. But on our case, let's assume we fully stick to our trading plan and exit here, following the 1.7 rule. So mathematics are 607, and I have to exclude this 80.98 from here, ending up at almost 688. This is an impressive result for only 5 days. Now you may think, well, if I would have let the trade run until the end, it would have ended probably above 900. And that is true, but you have exposed your already won 688 during 6 days additionally to make that extra of couple $100. What kind of risk management is that? Of course, it's your decision to let the trades run till the end, but we think the risk was not worth at all. We will not pause on advising how important a good money management behavior is. Stick to the 1.7 rule, and at the end of the year, your P&L will be highly rewarded. And with that, the only remaining thing on my side is to wish you very good and safe trading. See you all in the next episode.